Good morning, and thank you for joining us. Hey, good morning, and thank you for joining us. I'm Stephanie Grace from NOLA.com, the Times-Picayune and the New Orleans Advocate. And we're here to talk about some important measures that will be on the ballot November 13th, with early voting starting at the end of this month. Louisiana voters are being asked to consider 4 proposed constitutional amendments. They include 2 tax-related measures long sought by business groups who argue that these changes would help Louisiana compete in the 21st century. Joining us to explain what they would do and to answer your questions is our friend Robert Travis Scott, president of the Public Affairs Research Council in Baton Rouge. Before we dive in, we'd like to share a short message from the sponsor of today's town hall, AARP.
AARP Louisiana is once again delighted to bring you this educational forum with the Advocate. I'm Denise Botcher, State Director for AARP Louisiana. For nearly 40 years, the turnout of voters over the age of 45 has significantly outpaced that of younger Americans. In fact, people over 65 continue to show up at the polls far more than any other age group. So I'm glad you're tuning in to today's show. Hurricane Ida postponed state and municipal elections in Louisiana. For some of you, you'll be casting important votes for mayor and city council members, and then for others, for public transit. For everyone statewide, will have the responsibility on deciding on 4 amendments to the state's constitution. It's important that you know what's on your ballot so you can cast your vote. You can cast it safely from home, early, or on Election Day, November 13th. But you must get prepared now. Your vote matters. Make your voice heard on the issues that matter to you.
Thanks, Denise, and welcome, Robert.
Hey, thanks, and thanks to Denise and AARP for sponsoring this event. And by the way, I just turned 65, and I'm a member of AARP. And although you don't have to wait till you're 65, I don't think to join.
Right, I'm getting the mailings, so yes.
Yeah. But she's exactly right, Stephanie. You got to be prepared when you go into that booth. You don't want to walk into the voting booth, especially on Election Day, and not have your mind made up on how you're going to do the constitutional amendment votes. Because if you just walk in and read the ballot, that may not be sufficient to keep you informed on what they're really going to do.
And that really leads us to kind of, I think, the bulk of the reader questions we got, which are, can you explain these to us? So let's do that. Let's run through 1 through 4. There are 4 of them. And tell us a little bit about what they would do. Let's start with number 1.
Yeah, I'd be glad to. And as president of the Public Affairs Research, Council, every year when these things are on the ballot and voters have to go there, we put out a guide for this. And the guide doesn't tell you how to vote. It just gives you the pro and con arguments on the amendments. We got off easy this time, Stephanie. There's only 4 of them this year. I mean, there's usually like about 7 a year, and we've amended our Constitution over 200 times since
the per guide.
It was created in 1974. Okay. So these amendments this time around, and again, we like to follow these very closely. The Public Affairs Research Council, we've been around since 1950. Just looking for greater transparency and accountability in state government, and we also are sort of a watchdog, looking out, making sure open records law, strong ethics laws. These are all things that we try to back, and so constitutional amendments very frequently hit on financial issues, and that's what's happening this time as well. You've got 4 of these, and all 4 of them are related to state fiscal or financial or tax issues,
right? Or local tax issues in one case.
And when it very much so, yeah. And in number 3, if you happen to be in one of those levy districts, but everybody in the state on number 3 has to vote on it. They're probably wondering, why do I have to to vote on this? So if you want, how do you want to start? You want to start with number 1?
Let's start with number 1. Can you tell us briefly what it would do?
Yeah, number 1 is, and I should disclose to you and to everybody, as I have before, amendments number 1 and 2 very much align with the research and recommendations that PAR, our organization, Public Affairs Research Council, we'll call it PAR, and very much align with the recommendations and research that we've done over the years, as well as a lot of economists and tax analysts who have looked at Louisiana's very complicated tax structure. We're very much an oddball in the way we do taxes in almost every way in Louisiana, and sales tax is one of those. We have the highest combined state and local sales tax rate in the country. We're number 1, and maybe not the best thing to be number 1. We also know that's a fairly regressive type of tax.
And that's not something that this amendment would address.
I was going to say, yeah, we also have just huge numbers of exemptions to the sales tax, some on the local, some on the state. It's a very confusing array. But that isn't touched by this. What is addressed by this is the fact that we have a highly decentralized sales tax system. Our state constitution requires that each parish appoint a collector, and that collector is the one who collects the local sales tax, for all the different entities in their parish. And you may have a lot of different taxing districts and municipalities and whatnot in each parish, but you've got it narrowed down to just one tax collector on each parish level.
And that could be a sheriff, that could be city government, school board.
Another confusing part of it is parishes are very different how they collect it. The sheriffs do it, school boards do it. In New Orleans, the municipality does it. And in some cases, the parish government does it. In fact, school boards are the ones that probably the most number of parishes have a school board collecting it. Most people don't know this. So
I did not know that. Okay.
Every time around, and local governments are very possessive of this right to do this because it's in the Constitution that they can do it, and that's why voters have to vote on this if they want to make a change in how this is going to happen. But local governments are highly dependent on the sales tax, much more so than you find local governments in most other states. The local average sales tax, just for the locals alone, is 5%, and in some municipalities is even much higher than that.
Right.
And the property taxes that these local governments get in no way sort of match the kind of weight that you see that the property tax applies in local governments around the country. We're probably about half the national average in how much the property tax supports schools, for example, in Louisiana.
So how would this...
Local governments are very possessive of that, and they very much want to look out for that money. And so that's why they haven't been too eager to change this decentralized system. So the Speaker of the House came together, got everybody in the same room, so to speak. There was a special commission formed. Always, I was on that commission, and they basically came up with this plan, which the locals have felt so far is a system that will protect their interests, but also lead to better streamlining, create a better business environment, because businesses have such a complicated way of dealing with this, especially if you're in multiple parishes. You're dealing with all these multiple parishes. You're not only having a collection issue with multiple parishes, but they might view the law differently. And they might audit you, and you might have multiple audits going on at the same time. And in fact, that happens. And you might be treated differently from a company out of state that is doing online sales and shipping it in, because their tax collection system goes through a more centralized state special body, separate from the Department of Revenue. So what I just described to you is, quite frankly, a mess. And I think people realize that it needs to be fixed, both from a common sense standpoint, but also just from a legal standpoint, because I think a lot of people are concerned that there's going to be a court challenge to this system, especially looking at issues of maybe unfairness between companies operating outside and inside the state. So number one would do 5 things.
Okay. That's what I'm getting to. Yes.
It's important to understand the kooky context we find ourselves in, because we're an oddball. Louisiana is a real oddball. Other states don't do it this way, except for maybe the exception of a couple of others. And it would do 5. It would create a commission, of course. This is Louisiana. If you want to get something done, you probably got to create a commission, but it would be a commission with a great deal of authority and power. And the commission would then be responsible for collecting the taxes that are coming in, and then it would be responsible for remitting those taxes back to the correct local government jurisdictions to which the money is owed. The fourth thing it would do is it would help set policy. So then hopefully you'd have a single body deciding, well, in a lot of cases, Stephanie, when you and I buy, shoes or a TV or something, there's really not much dispute about the tax on that and what it is. But there's a lot of different kinds of transactions, especially between businesses, where people ask, is that a taxable transaction? And this all goes on under the radar of most normal people. They don't see it, but there's a huge amount of litigation in Louisiana over this. So there's a lot of court cases. It's become very complicated. And it's partly because you have all these different jurisdictions, interpreting the law and the regulations differently. So hopefully this commission would sort of set a policy that people could agree on. And finally, it's supposed to set rules on audits. It does not right off the bat streamline the audits or create a whole new audit system, but it requires the new commission to start heading down that path to try to make a more sensible audit system. Even if this amendment passes by the people on November the 13th, it still will not create that system. In order to create that system, the legislature has to then take the permission it has from this constitutional amendment and go back and meet in the regular session next year, probably next year, and they have to vote a 2/3 majority on a bill that would implement and lay out the details of how the system was worked. So there's still plenty of time to sort of debate the details.
Now, why didn't they do that before going to the voters?
Well, that's a good question, and there was a lot of good, discussion, about that. At the end of the day, they thought, let's let the people vote on the fundamental issue, and then let's come back with, the details. And they thought that was the most, and it may have been, they were able to get this much accomplished, and we'll see if the people want to support a sales tax streamlining when they go to the polls.
Okay, and let's move on to number 2. Which I think you also had some involvement. Is that right?
Yeah, and like I say, we think sales tax at par. We think sales tax streamlining makes tremendous sense, and
that's one. Yeah.
We'll be involved in, I think, a lot of the discussions about how this thing's going to operate and some of the issues around that. But I mean, I think it's once people understand what's trying to be done and they realize that the local government entities, except for very few, are okay with taking.
Right. I think there's possibly some concerns of sending the money off to Baton Rouge and not necessarily getting it back quickly or without some politics. I mean,
the local governments are worried about issues like, supporting their bonds and making sure they have good cash flow. And these are legitimate, concerns. But I really do think that great pains have been taken to make sure that these things are protected with this legislation. And in fact, the whole governance structure of this new commission, they are representatives from that are being named by the major representative groups of the cities, the municipalities, Louisiana Municipal Association, Sheriff's Association, School Boards Association, and so on, who are naming the people to this commission, in addition to some state revenue department. So you have a really incredible balance there of power on that commission. And so, I think so many safeguards have been put into this that those concerns have been hopefully minimized and hopefully will not be a problem.
Okay. Let's move on to Amendment 2, which I think you also had some involvement in. And can you explain what that would do?
Yeah, Amendment number 2, basically our Constitution sort of sets the rates for the individual income tax. And that's the primary thing that Amendment number 2 goes after, but it also affects the corporate income tax and the corporate franchise tax. The individual income tax is the tax that, we would pay. We fill out our forms, every year for that state tax. The upper rate is 6%. And the way we go about that is to take whatever we're paying in federal taxes, and we were able to, on our state tax income form, deduct that from our income. So whatever federal taxes you're paying, you can deduct from your income on your state income tax form. Remember, it's not just individuals who are in the individual tax form. It's
Right.
also a lot of companies, a lot of small companies and fairly substantial companies file the individual income tax form.
So if we get rid of that, then what happens?
Constitution actually right now requires that federal deduction be allowed. And we're the only state in the country that has a constitution that requires that. And in fact, we're only one of, in fact, Iowa used to have this, and they got out of it just earlier this year. Most states have long ago gotten rid of this entanglement with the Washington tax policy.
And we saw the effects of this recently after the tax bill of a couple of years ago, when state revenue actually went up, local taxes went up because federal taxes went down.
Yeah, and that's what you're going to see is over time, whatever the tax policy is in Washington is going to go up or down in terms of our tax obligations here in Louisiana, and that's going to immediately affect state revenue, and it's going to affect people's pocketbooks directly. So this amendment would basically take out that instability. It would take out that entanglement with Washington's tax policy, and it would just say, look, we're not going to have this deduction anymore. Now, it's a really big deduction, and so the important thing that the amendment does is it says you actually have to lower the tax rate. Okay, and it's the Constitution sets a new limit on the upper rate of tax at 4.75%. That's coming down from 6%, and the actual implementation of it in the statute is actually going to take it down to 4.25%. And that is a really big, tax rate decrease. And that's going to compensate for the fact that this deduction would no longer be allowed. The constitutional amendment doesn't, all it really does is it says, you, the legislature, and your statutes can decide what to do with this federal tax deduction. It doesn't say you have to have it or you can't have it. But the statute says implementing it would lower the tax rate, get rid of that deduction. It would also get rid of excess itemized deductions, except for medical expenses. And what that would do is it would allow a low rate, a rate that at 4.25%, we would have, we'd go from like number 40, in our tax rate in terms of being a high rate, or I guess number 10, it would the highest rate, down to where we'd only have South Dakota that would have a lower rate than us, as well as the states that don't have an income tax. So we'd be right at like number 10 or 11 in terms of tax rate.
We do have a question on this, a reader question, and it is from Jacob in New Orleans, and he wants to know, what kind of budgetary shortfall can we expect as a result of reduced revenue if this passes? And I think the companion question that a lot of people have is, will my taxes go up or down?
Yeah. And that is the question that everybody wants to know. And I say this whole thing is calibrated to try to be what's called revenue neutral. And by that, I mean, not only revenue neutral for the state, but also revenue neutral for most individuals who are filing their taxes. So basically, in fact, I had a short discussion with a member of the Legislative Fiscal Office who analyzed this yesterday. And it's about as revenue neutral for the state as you can get. I mean, it's down below, way below 1% in their estimates of its impact. So you're not going to see, as long as the tax system, remains the same, we switch over to this, you'll have about the same amount of revenue for the state. For individuals, you'll find that by and large, they have calibrated this because your rates go down, your lower bracket goes down a little bit, your middle bracket goes down a little bit, and your upper bracket goes down quite a bit. And what that's going to do is each person in each income level is probably going to have pretty much a wash. And most people will probably not see any real effect of this. However, it is true that the deduction itself, once they get rid of it and go to this new system, you'll have a slightly more progressive tax system. You'll have a system that actually will probably be more favorable, all in all, on the income tax to the people on the lower income scale.
That's interesting. Okay, that's not what we often get in the state. So
Yeah, and it's not a big move, but
Mhm.
it tends that way according to the Legislative Fiscal Office.
Okay, interesting.
Now, this law, what goes through, I mean, it has the advantage of making better sense out of our tax
Right.
system. We're no longer tied up with Washington. All the other states have figured out this is a dumb idea, to be doing what
Right.
we're doing. Economists and studies for years have said we need to do this. We would
And
have we don't have a really high tax burden on our income tax, Stephanie, in
mhm,
Louisiana, but we have that really high upper rate. And so
right.
when you're looking at Louisiana, the image of it is, well, we have this really high rate. It must be a really bad tax environment. I think what this amendment does and these laws do is it basically gives you a more honest and truthful representation of what our real tax is. And because
Okay.
now you're not having to figure out what all your deductions
Mhm.
and
This is your rate, but with these deductions, this is what you actually pay, and
yeah,
they
it's gonna be a lot simpler. It's gonna be
yeah.
simpler. It's gonna be fairer. If you have a really high tax rate and your tax burden is about average or maybe less, well, something unfair is going on there.
Okay.
So I think they'll probably iron out some of the wrinkles.
Okay.
Um, but this
What
this also impacts if this constitutional amendment passes. It obviously makes those changes to the individual income tax, which we think very favorable for the state, very favorable for the business environment, very favorable for individuals, and so on. It also triggers some changes in the corporate income tax and the
mhm,
corporate franchise tax, and in particular the corporate franchise tax, which we consider to be, and many people do consider to be a very toxic tax for business. It's not based on the amount of money you're making, amount of profit you're making. It's based on things called retained earnings and capital stock, basically money you'd be reinvesting back into your company. And
right.
we're one of very few states now who are hanging on to this in any substantial way. If you've gone back, 15 years, you probably have over 20 states that had a capital stock or a franchise tax. And it has nothing to do, by the way, with McDonald's franchises.
Mhm.
Like that. It's just the name of it
Just
is called a
one of
franchise.
these complicated taxes that most people don't understand.
Now, but
Would
now you've got only 16 states with it. Four of those are phasing it out, including Mississippi. Everybody's figured out this is a bad tax.
okay.
It's not good for headquarters operations. It's not good for investment. It's a real black mark on Louisiana, and I think the legislature, wants to, try to
Right.
phase this out.
I mean, we have a related question from Gail from Baton Rouge, who wanted to know really which interest groups are behind some of these things. And I think, you're certainly strongly hinting at it. Lobby, the Louisiana Association of Business and Industry is very much behind both of these first two amendments. And there's another kind of a coalition of business and government groups that I believe PAR is part of.
Yeah, I'm very familiar with that, and
Mhm.
in a sense, helping part of that group, I guess, that's going out making presentations and looking at the advantages of this thing getting passed. No, I think you've seen, Stephanie, something way beyond just a narrow idea of a business interest or a big business interest, in this. And this has been when I testified on this during the legislative session. I just brought a stack of studies that go way back, one
Mhm.
after another, by economist groups of all stripes coming in and saying this needs to be changed. And plus, you can go to the Tax Foundation; they'll tell you it needs to be changed. If you go to really anybody who looks at good tax policy, they'll tell you this needs to be changed. Even the people who are some of the groups like Louisiana Budget Project who are against, who are concerned about this amendment, they totally agree with getting rid of the federal
Right.
deduction. So there's really almost no real debate on whether the federal deduction should be there and how there's
Right. The
overwhelming.
issue is how high the tax rate should be.
Yeah, there's issues on tax rate and some of the other trigger mechanisms,
Mhm.
things like that. But look, I mean, we've been waiting for years to try to get this,
Uh-huh.
and to the governor's credit, all this was very complicated to bring about, and the legislature, really overwhelmingly supported these things, and way beyond the so-called business interests that you refer to. But the governor has wanted to see reform too, and he set out his parameters for what he wanted to see. He basically gave guidelines to the legislature, saying, this is what I can live with. This is also what I think would be good for the state. So it has a broad support, from a lot of different people. And I think some of the arguments against it that I've heard are pretty arcane.
Okay.
But I think it's a very healthy thing for us to do.
Okay. Let's try to use the last few minutes to go through the questions 3 and 4.
Okay.
Question 3 involves levy boards, basically, but not all levy boards, although everybody votes. Can you explain that?
Yeah, and like everything's in our Constitution. It's one of the flaws in our Constitution, Stephanie, is that even things that shouldn't be in our Constitution are. Anyway, we have lots of levy districts in our state. There have been a number of them that have been created since 2006. There have been about 8 created. About 5 of those don't have an automatic tax, and if you go back to other levy districts created before then, their boards were able to go and get and vote on a 5 mil tax to help support the operations and the construction projects for those levy districts. From 2006 on, these levy district boards did not have that automatic permission to go ahead and do that. And so what this amendment would do is it would say, okay, we're changing the Constitution, and any of these, it really affects five levy districts. Any of these 5 districts are now able to have their boards meet and do the automatic 5 mils. Now, don't get me wrong, any levy board, including these, at any time can go to the people and get the people in their district to vote on a millage increase.
So this is tax raising authority without
this gives tax raising authority to a limited degree to the levy boards of these 5 districts. Okay. And it has to pass statewide in order to be effective. But here's what's really interesting about it. It's structured so that if you're in one of those levy districts, the voters in your levy district have to also approve it for your levy district. And basically what this is it's basically a local election is what this melts down to.
And I think we need to say what levy districts we're talking about and what we're not talking about.
Yeah,
obviously there was big levy reform in Orleans and Jefferson after 2006, but it does not apply to those districts. We should say.
That's right. You had some break-offs, so let's so that people aren't panicking and going crazy. Really, the 5 districts really in question, and these are the ones that don't have the millages right now, and this amendment would give them automatic power to do that. If both the district and the state vote for it. One is the Cheniere Plain Coastal Restoration Protection Authority. That's Calcasieu, Cameron, Vermilion parishes. I've spoken down in that area about these. These people are very interested in this. The Iberia Parish Levy District. You've also got the Squirrel Run Levy Drainage District, which is very small.
Don't know that one.
That's very small in Iberia Parish. But big times, the St. Tammany Levy Drainage and Conservation District. This is big time for your circulation area and so on. And talk about maybe up to a $12 million question here for them, and also the Tangipahoa,
which is also our circulation area. Yes. So certainly a lot of areas affected by big storms in recent years.
Yeah, I'm curious. I wonder whether Ida will affect people's views, on this. If you're a state voter, you're saying, well, how should I approach this? You might want to approach this. Do you want to give these local districts the ability to vote for themselves on this issue, on election day? And if you do, you could vote yes, and then let each district decide. You're not deciding for that district, whether or not, they want to give their levy boards the automatic authority for the 5 mils.
And we do have a reader question on this from Robbie in New Iberia, one of the areas covered. How would this affect our parish if we resoundingly defeated a levy tax in 2018?
Yeah, it would that election would not matter to this election.
Okay.
And in fact, the levy board, if it can pull its act together and get enough money to launch a campaign to get an election, can bring another election for a millage in your district as well. I'm not sure whether there are any time
Right.
limits on the
But if
gap.
it passes, it could also raise, they could also raise taxes without an election.
Well, if this amendment passes,
Yes.
the local district people have to vote okay on this in order to allow that. Basically, you're asking
This
the
is
voters in these
the
districts if
the vote
if
election.
they want to give the district board this authority. That's right. That's what you're
Okay.
doing. So you're
Got it.
this is kind of a local election when you
Yes.
boil it all down. That's really what
Okay.
what it is. So
We've seen those before. Okay. And then quickly in our last couple minutes, Amendment 4.
yeah,
What would that do?
Amendment 4 tries to address what happens when the state faces a rather abrupt and unexpected budget crisis. We by our Constitution, quite rightly, we have to have a balanced budget in Louisiana. And if you're facing a problem with your finances next year, you can just go into the regular session and do your budget, right? Like we always do, and face up to whatever the revenue estimate is. But if we have an official revenue estimate that comes down, let's say, for example, in the middle of a year, and you suddenly realize you don't have enough revenue to pay all the bills in your appropriations bill, then you have to take action. You are required to take action. And the governor is given certain authorities to go about this. Number one, he or she has to go in and cut some expenses out of the budget. And then once they reach a certain level of dealing with that, they're able to go to the vast number of dedicated revenue streams and dedicated funds that we have in Louisiana, some of them constitutional, many of them statutory, and go in and tap 5%, of those, and pull those into the operating budget because they're not part of what we count as a balanced budget.
Because again, we have the situation, we hear about it all the time, where if there's a revenue shortfall, it hits higher education, it hits healthcare and
That's right.
corrections, and not a lot of other areas.
Yeah, and it honestly hits higher education probably more than healthcare.
Okay.
But you're right. I mean, those are the two quote more vulnerable areas. But I think what this amendment would do is it would say, well, now we can tap 5%, but now the governor can tap 10%
Right.
of each of these. There are a number of these funds and dedications that are protected, in the Constitution, will continue to be protected, but 10% for all the rest. And the governor has to go to the Joint Budget Committee in the legislature to get permission to do whatever the plan is. That's really all this amendment does.
Okay.
It helps you find a new little pot of money if you reach a crisis. Right. The people who are in favor of it say, like you do, this would help higher ed and healthcare. Others would say, look, I mean, this is just another way to live beyond your means.
Right. And to use dedicated money, I mean, we saw some of these shenanigans under the Jindal administration where tapping into various pots of money for recurring expenses ended up being a problem.
Yeah, and you get carried away with that, then you end up with these cascading, snowballing deficits, from year to year, or shortfalls from year to year, and that that'll lead to a tax increase. So there are legitimate arguments for this number 4, and there are legitimate arguments against.
But there are limits on how much you can do it. That's an important piece.
Yeah, you're going from 5% to 10% on those taps. So.
And with governor with legislative oversight. So
that's right.
Okay. Right. Well, I think that brings us to the end of our town hall here. I want to thank everybody for joining us. And Robert, you hinted at it earlier, but for those who don't know, this is Robert Scott's last election cycle as head of PAR before he heads off for his well-earned retirement. So we'd like to thank him for sharing his insights today, and also for his many years of work to help make Louisiana government better and more functional. And thank you again to AARP for sponsoring today's town hall. And I believe I'm preaching to the choir for people tuned into this, but don't forget to vote. Thank you all. And happy trails, Robert. Really, thank you.